And we will run through the daily time frame. Let's quickly have an holistic view of what is really going on in the market. Well, the US oil was one of the profitable instruments that we traded last week. So we had I think we closed with over 1,000 pips on the US oil last week as we rode price action from the $74 area into the $80 area last week with multiple entries, and was quite a profitable week for us as price action came back into the $80 level. Now we will have to look at this from a fresh, holistic point of view, and let's see what is going on the daily time frame. And for the sake of those who are not part of our live session last week, so we could all be should all be on the same page here. So on the daily time frame on the US oil, well, the first thing we observed is the fact that price action has been on a long-term bullish momentum here, which you can see on your screen. As a result of this, I was able to connect a series of higher lows here to give us that resultant bullish trend line. So we had the bullish trend line connected here, and as you can see, in the last 2 years, price has consistently climbed, find higher highs and higher lows. However, when we zoom into what has been happening here in the second half of this year, we had this bearish trend line figured out after connecting the series of lower highs, which gave us a picture of a bearish momentum since the month of June. And in the last couple of months, price action has been caught within a consolidation phase that is between the $93.50 level. So we had the resistance point of the consolidation phase around the $93.50 area. Then we also had the support level of the channel at around the between the $80 and the $77 area the last couple of months to give us an consolidation phase, which emphasized the decision in this market. However, at the beginning of this month, we saw a situation where price broke down this demand zone to give us a signal of a possible bearish momentum. And during the course of last week trading session, if you remember, we were looking out for two options that might likely happen here, considering the fact that price broke down that demand zone. We were saying if price comes back and we start seeing selling pressure, this might likely incite another wave of bearish momentum. However, the situation here was not that case, as we saw how price action evolved into something that looks like a double bottom structure, which is a strong reversal pattern. So we had the first touch here of the $70 level during the first week of this month. Price action climbed back into the $78 area. Then we found another low. Price was unable to break the previous low, thereby giving us a higher low at this point. And if you look at the structure here and look at what price action has transitioned into here, it's looking more like a reversal pattern in the form of a double bottom structure. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern. We shall be serving as a yardstick for trading activities. So with the neckline sitting right around the $78 level, we saw the breakout of that structure during the course of last week trading session. So we saw the breakout of the $78 level, which is the neckline of that reversal pattern, to give us a clue that we might be in for a reversal move in such a way that buy momentum will continue right above the $78 level. And this is what happened during the later part of last week. We continue to see buy pressure right above the $78 level. Now, if we take this into consideration, what happened here last month, where price broke down the key level at the $85 level, breaking down that bullish trend line, from a technical standpoint, whenever we have a breakdown of a structure like this, so we have the structure broken to the downside, we expect that price is likely going to come back and do a retest of that structure. And if we take into consideration what has been happening here in the last couple of weeks, it appears that we are going through a retracement phase where price appears to be transitioning into that situation here, where price might likely come back to do a retest of that structure. And when we took the previous impulse leg into consideration using our Fibonacci retracement tool, Running it through the previous impulse leg, we were able to identify a TP target zone if we are joining this buy momentum around the between the 50 and the 78.6% of the previous impulse leg. And as well, that same area might likely turn out to be a sell window for a trend continuation of that impulsive move. So this is what I'm trying to say here for the sake of clarity. So we had this impulse leg that started here in the month of November, took price into the $70 level. And as a result of this move here is more or less a retracement of that impulsive move, where I'm thinking that price might likely come back into the structure, evolve into a reversal pattern, selling pressure on our lower time frame to incite another wave of bearish momentum. So as a result of this, the bullish momentum that began last week might likely culminate between the around the $85 level, that is between the $82.50 and the $90 area. So this is what we are going to be looking forward to this week. The hopes that price might likely continue to the upside, considering the fact that we already have a breakout of this neckline right above the $78 level. Now, with the breakout of this structure now, its price is right at the $80. Remember, last week, price closed at the $80 level area. So during this week, we want to be seeing how participants in this market will be relating to the structure in order to make a decision for this week. So are we going to be having a breakout of the $80 level this week in such a way that price might climb up into the TP target zone we identified here? Or are we going to be having selling momentum right below the $80 level to incite another wave of bearish momentum? So these are the things we are going to be looking forward to here on the US oil. So in order to have a better understanding into what is really going on in this market, we want to understand how participants in this market are actually relating to the $80 level since the beginning of this week to make a decision for the week. So what we are going to be doing now is to scale down to a much lower time frame, just like the 4 hours time frame here, for instance. And on the 4 hours time frame, I was able to identify a typical structure which we can use to guide our trading activities for this week. Now, if we look at the 4 hours time frame here, and if I zoom out for the sake of for the clarity here, you would notice that we have a descending channel since the month of October. So since the month of October, we saw where how price action participants in this market use the $92 level as a strong selling niche, as every attempt to, for buyers to break out of that structure has been met with strong resistance from the sellers. And in fact, following the rejection of that supply zone here at the $92 level, we saw a situation where price consistently found lower lows and lower highs, giving us that descending channel that we have here. So we have the resistant level of descending channel here, and we also have the support level of the descending channel here. Now, during the course of last week trading session, after, at the beginning of this month, we saw our price continue to find selling pressure right around the $83 level. And in fact, if we go to as far back as the month of October, mid-month of October, we saw how the $83 level has been a major determinant of price action. So look at what happened here during the month of October. This level was holding by pressure. So I was able to identify that area as a demand zone as we continue to see buy pressure in the month of November. However, since the breakdown of the structure here mid-month of November, price has been trading below that structure to further emphasize the strength of the sellers at this point. And if we zoom into what happened last week, we witnessed a breakout of the resistant level of that descending channel to insinuate a possible bullish momentum in the next couple of weeks. Now, with the breakout of that resistant level of the descending channel, what we did next was to identify this temporary bullish trend line. In the meantime, so since the second week of this month, we were able to connect the series of higher lows to give us that temporary bullish trend line. So this bullish trend line shall continue to guide our bullish momentum if price continue to trade above that trend line, we want to be looking out for trading opportunities above that structure. However, if price breaks down this trend line, then we might be seeing this as a momentum shift, which might lead into a situation where price comes back to do a retest of the resistant level of that as descending channel. Remember, we had the breakout of that structure. So, from a technical standpoint, we expect that if a breakdown of that bullish trend line here happens, price is likely going to come back to do a retest of that resistant level of the descending channel. And if you look into the structure closely, it also shares a confluence with that $74 level in anticipation of a trend continuation to the upside. So this is the view we have here on the 4 hours time frame. So in order to have a better perspective here, like I told you on the daily time frame, we want to be seeing what our participants in this market will be relating to that $80 level we identified on the daily time frame. So in that regard, we will scale down to the 1 hour time frame. And on the 1 hour time frame, I was able to identify how price action started this week. So this is what we had here at the beginning of this week. So we had a huge gap, a huge bullish gap. So this is where price closed last week. Price closed at around the $79.40, and it opened this week at right above the $80 level. So we had a gap here, and for me, this is a sign that we might be having a bullish momentum for this week. But we cannot jump into such conclusions yet, as we need to understand technical structure of what is really going on around here. So in that regard, we looked at how participants in this market has been relating to the structure since the beginning of this week. And one thing I was able to decipher here is the fact that price has been caught within a channel that is a 50 cents dollar channel that is between the $80.50 level here and the $80 area. So the $80 level now appears to be the support level for this week, as this is where price has started. And anytime price comes within the $80 level, we have been witnessing buy pressure. So we already have a channel between the $80.50 and the $80 level. So what we are going to be doing this morning is to remain patient to wait out for either a breakout of this channel to give us a sell momentum, that is breakdown of this channel to give us a selling opportunity, or a breakout of this channel to give us a buy opportunity. So this is what we are going to be looking forward to um, during the New York session today. Now, we had the breakdown of this channel here during the early hours of today, which gave us a sign that there is a tendency that sellers might likely come in at this point. And if we look at since the breakdown of that structure, we have a doji candle here, which indicates an indecision in this market right now. So for me, what I'll be advising you to do here, if you are not yet in this trade, is to wait out for price action to drop below the $80 level here for us to sell the US oil. And if price drops below the $80 level and price continues to ride to the downside here, even further breaking down that bullish trend line, then we want to be adding more position if we start seeing selling pressure below the bullish trend line that we have here to add more position to our existing trade on the US oil. Now, what there is a catch to this if price breaks down the $80 level, and that is if price breaks down the $80 level and price continues to the downside, hereby touching this bullish trend line here, I will be advising us to move our stop loss to lock in some profit, or move your stop loss to break even at this point, as we want to see how participants in this market will be relating to this trend line in order to make a decision of either adding more position to our sell position or getting ready to join a trend continuation to the upside. Remember, this bullish trend line has been holding bullish momentum since the beginning of this month. So we want to be patient enough to see how price will relate to that structure. So we want to be moving our stop loss to break even or lock in some profit, and let's see if price will break down that structure. So if price breaks down that trend line, then with selling pressure below the structure, then we want to be adding more position to our sell trade. However, if price continue to see buy pressure right above this bullish trend line, we might be in for another wave of bullish momentum to the upside. So we want to be getting ready to join that rally when it happens. So that is the first situation here that we shall be looking forward to if price breaks down dollar level. Now, if the breakdown of the $80 level does not happen and price continue to find higher highs on our lower time frame in such a way that it leads to the final breakout of the $80.50 level, find that want to be joining the bullish momentum to the upside. And if we are lucky enough, we continue to see buy pressure above this $80 area or around the structure, this is a very good confirmation that we should join the trend continuation to the upside. So we have a very simple setup here that we can use to guide our trading activities for the week, and that is that flat channel between the $80.50 level and the $80 area. So if price trades below the $80 level, we want to be looking for selling opportunities. And if price breaks out of the $80.50 level, we want to be looking out for buy opportunity on the US oil. So these are my views here on the US oil for today. And I hope I was able to simulate all the possible scenarios that might likely happen here. And if you think or you need me to make further clarifications on an aspect you don't understand, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard.